Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Thursday, the 24th of April 2025. So, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we kickstart into the intraday technical outlook on the broad-based cross asset classes, ranging from the major US dollar pair, the major stock indices, and the two key commodities, gold XAU/USD and West Texas crude oil, let's have a recap what has taken shape yesterday in terms of the movement of these broad-based cross asset classes, and as well as any relevant key data release and news flow that have a potential impact towards this intraday price action movement of these cross asset classes. So let's start with the key economic data releases first for yesterday. So for yesterday, I want to highlight one particular key economic data release, which is the S&P 500 Global Manufacturing and Services PMI data for US that was released yesterday over here. All right. So we know that in US is rather unique because in US there are actually two PMI data compiled by different organization. S&P 500 is one organization that compile this PMI data, and another organization is the localized ISM, Institute of Supply Management. They also they also compile manufacturing and services PMI to gauge the health of the US economy. So traders in the US, market participants in the US, they are more or less kind of more in tune or more focused on the ISM manufacturing and services PMI, not so much on the services PMI, not so much on the S&P PMI data, but nevertheless, it also able to tell us the gauge, have a gauge of the long-term prospect on the long-term economic growth prospect, pardon me, on the US economy. So let's look at what the data highlighted to us yesterday. So on the S&P Global Manufacturing PMI, this is the preliminary data. That means for the month of April, for US, the manufacturing activities in the US actually are kind of slightly improved. All right. So what I could see over here is that for PMI data, anything that is below 50 represents contraction. All right, above 50 expansion. Then after that, you need to look at the trend, whether the expansion or contraction is slowing pace or not. So later I'll show you all the graph to have a better view of it. So market consensus, right, for the manufacturing activities in the US based on the S&P 500 Global Manufacturing PMI, 49.1. All right, they're expecting 49.1 below 50.2 that was printed in the previous month of March, but it came in slightly higher than expected, 50.7. So you look at the trend right now of this S&P Global Manufacturing PMI data for the US. Yes, even though it managed to survive at the 50 level mark, which is still showing signs of expansion in the manufacturing activities in the US. But however, if you go to the 3-year trend, the pace of expansion is not so robust. It's more like a sideways kind of thing. Okay, it's a sideways kind of a expansion since 2024. All right, so perhaps this may tick up higher. Why? Because what Trump's want is to make US as a global manufacturing hub, but that takes decades. But most important thing is over here is that close to 3/4 of US economic growth at this juncture since the last 20 or 30 years, even more than that since the 1997 Asia financial crisis. The bulk of US economic growth is not driven by manufacturing activities, which is being depicted by manufacturing PMI data trend, but it's more depicted on the services industry. So services PMI trend will have a much more meaningful gauge on the current status of the US health, the current status of the prospect of US economic growth. So if you look at the S&P Global Services PMI data for services preliminary again for April, it actually came in below expectation. Yes, it's still above 50, representing expansion, but it came in at 52.5. Market is expecting 52.5, pardon me, but it came in at 51.4, and also below the previous March print of 54.4. All right, so if you look at the trend on the services PMI, okay, so the print of 51.4 in April is actually the second softest growth rate in the services activity in the US in almost 1 year. All right, so if you look at the 3-year trend, very clearly it starts to print a lower high. All right, a lower high, and it started to trend downwards since December print of 2024, slightly at the 57 mark. Yes, it's still holding above 50, but the rate of expansion has indeed started to slow down in the last 4 months, okay, since December 2024. So that actually gave a kind of a very alarming situation that the US economic growth prospects is not that rosy, given the fact that 3/4 of US GDP growth is driven by services activity, and services activity, we could use services PMI as a leading gauge of it because of the nature of how services PMI data is being compiled. It's survey based, so you talk about soft data rather than hard data that really hard data that only comes in when things have passed, right? Soft data survey based is actually forward looking, okay, tend to be more forward looking. So right now, based on this forward looking services PMI trend, as compiled by the S&P Global, is showing that the services activity growth trend, yes, it's still expanding above 50, but the growth trend is slowly deceleration, in the deceleration mode. So that represents that going forward in the next coming quarter or even in Q3, US economic growth will be more on the softer side of the story rather than on a uptick. That means there is this growing risk of a recession and even stagflation, given the fact that some of the other latest inflation expected survey is pointing up to sticky inflation ahead. All right, over here. So with that, initially the US stock market, you see, because this was released, let me share with you. Okay, this reading was released at 9:45 p.m. Singapore time, so that's about 15 minutes after the start of the US session. So if you look at the major US stocks indices performance, it actually gap up at the opening. It gap up at the opening. So ignoring the rather lackluster services PMI data that I share with you all for the US economy. So why does it gap up? Because market now is in the very short term is very fascinated or paying more attention to the trade tariffs related news flow and news flow pertaining to coming out from the US White House administration, where it's just like very uncertain that certain officials could actually say one thing and trigger a gap up or gap down in the market. So what causes this gap up in the start of the US session was there was actually a Wall Street report stating that the White House considers slashing China tariffs by more than 50% to de-escalate this ongoing trade war between US and China. So it's reported here that the Trump administration is considering slashing its steep tariffs on Chinese imports, in some cases by more than half. So market rejoiced after hearing this, and still recall prior to the earlier session, the market also gap up as well because the on IE on Tuesday, where the US Secretary of the Treasury Secretary Bissett mentioned that potentially there could be also de-escalation in the near future between US and China. But what's surprising over here is after this gap up, the market can't maintain its momentum and trade all the way down. And even at the close of the US session, the S&P 500 closed near the session low. So even though we see all four of them, all the four major stock indices from the S&P, Nasdaq, Dow Jones, and Russell 2000, ranging from a daily close of 1.1% to 2.3%, but the price action on the intraday basis is not rosy at all. So later I'll explain to you all why when I share you the daily technical chart of this benchmark stock indices. Give me a couple of seconds. So why do the market actually taunted? The major US stock indices taunted by the mid-session and closed near the session low yesterday was because of conflicting remarks coming out within the White House administration. So early on, the news report was rather rosy, risk on, stating that the White House administration is looking at China tariffs by a more than 50% reduction in China tariffs, right? In I call it tariffs against towards China products heading to US. But then thereafter, what we could see over here is that BISET that it came out stating that there is no unilateral US offer to cut tariffs on China. So we see over here is that there's a lot of conflicting voices within the US White House administration. So whom to trust right now in terms of market participants point of view. So that causes this kind of a very sharp erratic reversal on two-way direction. And with this, we call it de-escalation optimism has started to fade yesterday after BISET remarks stating that there is no unilateral US offer to cut tariffs on China. We start to see bullish exhaustion on the intraday basis on the major US stock indices. And if those guys who knows a bit of technical analysis, if you were to look at the daily chart of the S&P 500, we start to see a bullish exhaustion price action by the formation of this bearish daily shooting star candle right exactly after it retests its 20-day moving average. So this represents signs of potential bullish exhaustion, stating that the upside momentum has started to wane after 2 days of positive price movement. And this bearish observation also can be seen on another benchmark stock index, which is the Dow Jones Industrial Average. Okay, right exactly at the 20-day moving average. After a test of it at the start of the US session, and towards the end, it can't maintain a momentum and close near the session low by forming this bearish daily shooting star candlestick, representing bullish exhaustion potentially in the last 2 days of positive price action. All right. So, and with this, what we call it, US China de-escalation optimism has started to fade off yesterday after BZ shoot down that there's no unilateral or there's no plan of the White House having that unilateral tariffs cut on China. We start to see the dollar strength seen earlier in the last day or so, giving back over here. All right, so the US dollar starts to actually give back its strength as well as we are speaking right now. All right, right now over here. And what's interesting over here, let's take a look at dollar yen. Why dollar yen is important? Because dollar yen is considered as a safe haven currency play. That means, i.e., if we start to see this US, we call it trade tariff situation, not on the rosy side of the story, whereas US stock market starts to show signs of downside momentum or bullish exhaustion, the dollar yen also starts to inch downwards as well. All right, so in terms of dollar yen over here, let's look at the price action of the dollar yen on the daily basis. Over here, let me share with you where's the dollar yen. Yeah, this is the dollar yen. So dollar yen, as we are speaking right now, is actually down by 0.5%. All right, it's actually trading down by 0.5%. So this down by 0.5% came after 2 days of strong movement. All right, so on Tuesday it rallied by 0.5%, and yesterday it added 1.3%, and today it actually shaped a decline of intraday decline of negative 0.5% as we're speaking, and back below the 143 psychological level. So the explanation why the dollar yen starts to inch downward is because of the rather lackluster movement that is being seen overnight in the US major stock indices, indicating that US so-called trade tariffs, US China de-escalation optimism has started to fade off as well, or has started to fade off. That's what I mean over here. So with this fading off of the China de-escalation play that was seen a day ago, also causes gold to fight back as well. So you look at gold price over here, managed to actually shape a recovery right now as we are speaking. All right, so gold managed to inch up 1.4% as you're speaking after 2 days of consecutive decline. So later I'll share with you all what are the key levels to look out for on the intraday basis. So still you recall yesterday we still have a bullish bias on gold. So gold tested the key short-term pivotal support before staging that minor bullish reversal as we are speaking right now. All right, so this is the first segment of today's daily dose, which is covering the intraday price movement yesterday of this major cross assets, and as well as their related news flow and data releases. All right, so now let me jump straight to the second session, which is the intraday technical outlook on the broad-based cross asset classes, starting from with the FX market. So same thing, I will expand my screen so that you guys could have a better view of the charts. Right, so now let us start with the FX market first. All right, over here. Okay, so where is the, oh yeah, the FX market is here. So let us start with the euro dollar. Okay, so the euro dollar yesterday, it attempted to actually shape down, inch downwards over here. So at the close of the US session, it managed to stage a bounce. All right, a bounce. All right, at this time. Okay, so what we could see over here is that very interestingly, the hourly RSI has started to shape a bullish divergence. Okay, by printing a higher low after hitting a extreme oversold level on the intraday basis on Wednesday. Or not even on Wednesday, I would say that on Tuesday late US session, because it's Wednesday 5 a.m. Singapore time. Whilst yesterday the price action tried to retest this low over here. Okay, it tried to retest the low again. Okay, of last Tuesday US session. So yesterday US session tried to retest the low of last Tuesday US session, but can't break below it, and the hourly RSI starts to shape a bullish divergence by shaping a clear higher low. So indicating that the downside momentum that is being seen in the last 2 days in the euro dollar seems to get uh, we call it a win off, or start to ease off in this downside momentum. So with that, we will have a bullish trend bias for today on the euro dollar, but using a slightly adjusted short-term pivotal support for today, because of the noises that's being seen yesterday at the first support at 130 113.40. So I push it slightly lower, 112.70, 112.30, which is the minor swing low area of 11th of April and 15th of April, and as well as this minor ascending channel lower limit, or the minor ascending channel support, confluencing at 112.30, which I drawn from the low of 2nd of April. First resistance it got to surpass, pardon me, will be at 1480. So no change over here. 14. Okay, let me put it in writing so that you guys could actually have a better view. 1480. Okay, so this will be my resistance. My first resistance to watch. Only a breakout above 140, 114.80 may expose the next intermediate resistance at 115.80, which is very close to this Monday swing high area at 115.73. Only a sudden push down and an hourly close below 112.30 will invalidate today's intraday bullish bias to kickstart a extension of this mean reversion corrective decline to retest the 20-day moving average, which is confluencing with this former minor swing high area, now turns into a pullback support at 111, former minor swing high area 3rd of April, and as well as the pullback support of this prior bullish breakout from the long-term secular descending channel from January 2008 high, and the 20-day moving average, all of them confluencing at this next support zone at 111.12/110.50. All right, so that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar continues to hold above our short-term pivotal support level at 132.05, and also yesterday is an attempt to actually retest last Tuesday US session low over here, but managed to survive at 132.50. And what's interesting is that the hourly RSI has started to print a higher low. All right, so indicating that the 2 days of downside momentum has potentially starts to ease off as well on the sterling dollar. So with that, no change, still using 132.05 as my short-term pivotal support for today to maintain that potential intraday trend bullish bias. First resistance it got to surpass will be at the 133.60 level. Okay, 1.3360 level. Okay, over here, only above 1.3360 level may expose the next intermediate resistance coming in at 134.35, which is very close to the minor swing low of this Monday and this Tuesday. Only a push down and an hourly close below 132.05 will invalidate today's intraday trend bullish bias to kickstart a extension of a mean reversion decline sequence, exposing the next near-term support at 131.12, 131.20, 130.30, which almost these two support converging with the rising 20-day moving average. So that's for the sterling dollar. Next up will be the Aussie dollar over here. So the Aussie dollar, like I explained, the last few days it tried to whipsaw and can't break above the 64 figure pivotal resistance level. Why this 64 figures is very important? Firstly, if you look at the previous three occasions since 20th of February, price tested it, there's a bearish reaction. Tested closely on the 17th of March, there's a bearish reaction of it, and tested on 3rd of April, very close on 3rd of April, and there's a bearish reaction of it. And in the last few days, on Monday, it attempt to actually break out of 64 with a daily close above it. But what interesting over here is that the subsequent 2 days of price action do not have a positive follow through. Okay, after that break on Monday, so it represent this Monday push up or this bullish candle above 64 figure level is kind of a bearish failure bullish breakout by the last 2 days of negative price action. So this is the negative price action candlestick, a bearish candlestick, both in black. And this one over here, you see a long shadow, but after that long shadow, it closed near the open and near the low. So this is considered as a bearish shooting star as well. So what we could see over here is that given this state of 2 days of bearish price action without any positive follow through after that single day breakout on 21st of April, which is Monday, above the 64 figure level, that represent a failure bullish breakout. Okay, in terms of probability by the price action thereafter in the last two sessions. So with this bearish set of price action that's being seen on the daily chart, for the intraday basis, pardon me, what where I'm doing here, yeah, this is the Aussie dollar. All right, so from a intraday perspective, right, I will flip to a bearish bias stance using 64 figure slash 64.35, which is this minor range resistance that has been in place since this Monday, that was tested on Wednesday, come breakthrough. We'll flip to an intraday bearish bias stance with first support level to watch will be 63.35. A breakdown below 63.35 exposes the next intermediate support zone at 62.80 slash 62 figure, 62.50, pardon me, on the Aussie dollar, which represent which so confluence with the 50-day and the 20-day moving average, I think as a similar support zone as well as 62.80 slash 62.50. With a sudden push up above 64.35, then potentially we see a retest at the 200-day moving average at 64.70. That's the next intermediate resistance. A breakout above 64.70 may see a probe towards the next intermediate resistance zone at 65.20 slash 64.40. So this 65.20, 65.40 is the minor swing high area of 13th of November last year, 20th of November, and 25th of November last year. Right, so that's for the Aussie dollar. Given the bearish price action that's been seen in the daily time frame chart, we will flip to an intraday bearish bias for today using 64 figure slash 64.35 as my short-term pivotal support, short-term pivotal resistance level, pardon me. So 64 figure, 64.35 is my short-term pivotal resistance level in today's potential intraday trend bearish bias on the Aussie dollar. Next up will be the dollar yen. So the dollar yen, what you could see over here is that a bit of whipsaw of yesterday's pivotal resistance, which is 143.20, pardon me, 143.20. So yesterday it printed an intraday high during the close of the US session at 143.60. So a bit of excess over there, okay, 20 slash 60. Oops, over here. So with that, I'll still maintain that intraday bearish bias on the dollar yen. So first support level to watch will be at 14110 over here. So a breakdown below 14110 may potentially see a retest on this Tuesday swing low area at 140.30 slash 140 figure level. However, a push up above 143.2060 will invalidate today's intraday trend bearish bias to see a squeeze up for the extension of this potential ongoing mean reversion rebound sequence, exposing the next near-term resistance at 14410 and potentially 14510 next, which correspond to the very closely the downward sloping 20-day moving average as well. So that sum up the intraday technical outlook on the major dollar pairs. So let us now turn our focus to the major stock indices, starting with the Hong Kong 33, representing the Hang Seng Index over here. So the Hong Kong 33 yesterday managed to see that push up and hit our first resistance zone, which is at 22,200, 22,220 and 22,500 level. All right, it hit this level. Now, right now, what you could see is that it can't maintain that bullish momentum, and today's Asia session is straight back down below the 20-day moving average again over here. So this is considered as a intraday bearish momentum observation as well. And what we could see is that the hourly RSI also staged a bearish breakdown over here below a ascending trend line support. Okay, pardon me, it's this one. Yeah, here. Right, it staged a bearish breakdown. Okay, below a ascending trend line support. So with that, potentially there could be some form of intraday minor weakness coming into play, given that the RSI hasn't yet hit its oversold level on the hourly basis. So with that, I'll be using 22,500, pardon me, 22,500 as my short-term pivotal resistance level. We'll flip to a intraday trend bearish bias on the Hong Kong 33. First support level to watch now you'll be testing this zone over here, the gap up that was seen on yesterday's Wednesday over here, and as well as the pullback support of that former minor swing high from 14th of April at 21,750 slash 21,605. Below 21,605 exposes the next support level at 21,180. And if this 21,180 can't hold, it may expose the minor swing low of 16th of April at 20,840. So 21,180 also confluence with the 38% Fibo retracement of this rally that is taken shape from 9th of April all the way up to yesterday's US session high. Right, so that's 38.2%, and the 20-80-40, 20-80-40 is close to the 50% Fibo retracement. Right, so that's for the Hong Kong 33. Next up will be the Japan 225. So the Japan 225, representing the Nikkei 25, still continues to hover above its 20-day moving average. It hasn't broken down below the 20-day moving average as what we see earlier on the Hong Kong 33, represent the Hang Seng Index. So this Japan 225, which represent the Nikkei 225, continues to be in a kind of a bullish dynamic, holding above this uh, ascending trend line support that I drew from the low of 7th of April, and also still holding above its 20-day moving average, roughly acting as a intermediate support level, the first intermediate support level at 34,730. So with that, no change. I will still use yesterday's pivotal. Okay, so what I do over is that I will still use yesterday's pivotal support at 34,315, since it hasn't broken above our first resistance at 35,730, which I highlighted yesterday. So 34,315 short-term pivotal support to maintain that intraday trend bullish bias on the Japan 225. First resistance to watch will be 35,730. A breakout above it may see the next intermediate resistance coming in at 36,450, which is the minor swing high of 3rd of April, and also confluence with the downward sloping 50-day moving average. However, a sudden plunge below 34,315 will invalidate today's intraday trend bullish bias to kickstart another round of potential impulsive downward sequence, at least in first step, exposing the next intermediate support at 33,680. Below it may see 32,425 coming in next. So that's for the Japan 225. Next up, Germany 30, representing the German DAX. So Germany 30, yesterday we flipped to a intraday trend bullish bias, looking forward to hit up higher to retest up the 50-day moving average, which is at 22,240. So it's now coming very close to this 22,240 level. And what we could see over here is that the hourly RSI has started to print out a bearish divergence by shipping a lower high yesterday. Right, so what we could see is that yesterday's bullish momentum may have started to ease off, which we potentially may see at least some form of minor pullback, at least in first step, to revisit the 20-day moving average, and as well as the former minor swing high of 10th of April and 17th of April broken up, which is so close to this gap up as well on Wednesday, now turns into the first intermediate pullback support to watch, which is at 21,540. So with that, we'll flip to an intraday trend bearish bias. first resistance 22,240, short-term pivotal resistance will be at 22,570 over here, which is confluence with the descending trend line that I drew from the high of 18th of March. So only a breakdown below 21,540 may trigger off a much more pronounced corrective pullback, or more pronounced intraday trend bearish bias on the Germany 30, exposing the next near-term support zone at 21,060 / 20,890. However, if price action starts to pierce up and break above the pivotal resistance at 22,570, then that would more or less invalidate today's intraday trend bearish bias to see a further squeeze up towards the next intermediate resistance at 22,920, followed by 23,230 next. All right. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 has a bearish reaction right at the 20-day moving average, which I actually highlighted to you guys earlier on the cash market US Dow Jones Industrial Average, where it formed a daily shooting star right exactly at the 20-day moving average. And with the hourly RSI also shipping that bearish divergence yesterday, we will now continue to maintain our intraday trend bearish bias. So right now it's fast approaching a key near-term support level, which is 39,300, which was the gap up that was formed earlier on Wednesday, where due to that US-China de-escalation optimism. So a breakdown below 39,300 will be more or less indicate that this push up is more or less we call it a failure bullish breakout, or in a way a failure bullish gap up, and price action may kickstart another round of bearish movement to expose the next intermediate resistance, intermediate support level at 38,820. Below it may revisit this Monday swing low area at 37,900. However, a sudden push up above the 20-day moving average, which is the upper limit of the short-term pivotal resistance level at 40,380, will invalidate today's intraday trend bearish bias to see the extension of this mean reversion corrective rebound sequence extending to the upside, retesting 40,910, which is the minus swing high of 10th of April. Above it may expose the next intermediate resistance coming in at 41,740, which confluence with the downward sloping 50-day moving average. Next up will be the Nasdaq 100. So the Nasdaq 100 also shaped that bearish reaction of that pivotal resistance that we highlighted, which is 18,820 / 19,060. Okay, right exactly at this 19,060 before trading lower. So with that, first key near-term support level to watch will be the gap up that was seen on Wednesday, 18,350, or seen on Tuesday, pardon me, not Wednesday, 18,350. A breakdown below 18,350 will indicate that as a failure bullish gap up and kickstart a bearish movement potentially on the Nasdaq 100. In first step, exposing the next near-term support at 18,120, followed by 17,600 / 17,410, which is the minor swing low of 22nd of April. However, a sudden push up above 19,060 will invalidate today's intraday trend bearish bias on the Nasdaq 100 to see a squeeze up to retest 10th of April minus swing high at 19,280. Above it may see the extension of that mean reversion corrective rebound sequence coming in to test the next intermediate resistance, pardon me, at 19,800, which confluence with the downward sloping 50-day moving average as well. So far you could see that the 50-day moving average continues to remain below the 200-day moving average after the bearish crossover it on 11th of April. So that also representing a kind of a medium-term bearish trend that is still intact on the Nasdaq 100. All right, so with that, sum up the intraday technical outlook on all the major stock indices that we cover on a daily basis. Now let us focus our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, we see this U-turn yesterday on at this pivotal support level at 3287. All right, 3287 over here. So what I could see over here is there's a bit of whipsaw yesterday with a low of 32,260, but managed to close exactly at 3287 before bouncing off, okay, before shaping this minor inverted V shape. So because of this whipsaw, because of the way the price movement that is being moving in gold in the last few days is quite volatile. So for today, right, I want to actually have a higher buffer on my pivotal support level. So I have a zone over here Okay, so 32.42 over here, which is also the pullback of this former minor ascending channel resistance, medium term ascending channel resistance from this level here, okay, of 30th of December. Okay, now turns into a pullback support at 32.42. All right, so what I'm going to do is I'm going to slash this 32.42, yeah, 32.42. So I'll slash it at 242. Okay, so let me this one delete. Okay, over here. All right, so the hourly RSI, what we could see is that yesterday it shaped a lower low, right, lower low to print that so-called intraday low of 32.60 before bouncing up higher, close at 32.87, right? And in correspond, the RSI starts to form a higher high at the oversold region. So that represents easing off of yesterday's downside momentum or 2 days of bearish price action. So with that, still maintaining that intraday bullish trend bias, but I expect that I put a buffer, a wider buffer to take into account of the higher volatility potentially that we may see in gold price. 32.87/32.42, that will be my pivotal support zone for today. First resistance to watch out for will be at 34.20, no change. Above it sees a potential retest at the current all-time high that is made on the Tuesday Asia session at 3,500. However, a breakdown below 32.42 potentially sees the extension of this minor mean reversion decline sequence, exposing the next near-term support zone at 3194/3162, which correspond to the rising 20-day moving average. Next up will be the West Texas crude oil over here. So West Texas crude oil, yesterday we do have a bearish bias. Price action react exactly at the pivotal resistance of 65.4, and it staged a bearish breakdown. Tested our a bearish reaction, not breakdown. It staged a bearish reaction of about a daily loss of 2% yesterday. Tested our first support level at 62.39 before stabilizing right now as we are speaking. All right, now it's trading at 62.78 or 62.77. So still no change, still maintain that intraday trend bearish bias. A breakdown below 62.39 may expose the next near-term support level at 60.08. Below it may see 58.30 next over here. So 58.30, if you do the Fibo retracement of this rebound that is being seen from the 9th of April all the way up to yesterday's intraday high, which is close to the pivotal resistance of 64.40. That 60.8 is 60.08 is the 50% Fibo retracement, and the 58.30 is very close to the golden ratio of 0.618. All right. However, a sudden push up and a daily close above 65.40 short-term pivotal resistance will invalidate today's intraday trend bearish bias to kickstart another round of mean reversion rebound sequence, extending towards the next intermediate resistance at 68.05, which correspond to the downward sloping 50-day moving average as well. Above 68.05 potentially sees 70.42 next for West Texas crude oil over here. So this West Texas crude oil. So with that, let's sum up the intraday technical outlook on all the major cross assets. So before we go, let's have a quick look at the economic calendar. What are the data to look out for today? All right, so today is Thursday. So in Thursday over here, during the European session, we have a couple of consumer or business sentiment data out from Germany. So Germany, we have the info business climate, info current expectation, info current condition, and info expectation. So these are all more pertaining to the business sector in Germany, sentiment from the business sectors in Germany. So that is out at 4 p.m. Singapore time. So that could potentially influence the movement of the euro dollar, the euro crosses, and even the Germany 30 index over here. And from US point of view, we have a tier 2 data to me. This is not really tier 1, tier 2 data. Durable goods orders coming in at 8:30 p.m. Singapore time, 1 hour before the start of the US session. We have US official, not US, an ECB official speaking, ECB Lane speaking at 9 p.m. Singapore time. And another at 11:05 p.m. Singapore time, another ECB official that is speaking, ECB Montagner is speaking over here. And with that, that should be a rather quiet US session thereafter. So on Friday, tomorrow, right at the start, before the start of the Singapore trading hours at 7:30 a.m., we have Japan Tokyo core CPI data and Japan Tokyo core CPI data, which is excluding fresh food and energy. So this data is very important. It's considered as a leading inflation data print for Japan, given the fact that the Tokyo zone data always release about 2 weeks in advance. So that have potentially able to have a clear indication of the inflationary trend in Japan as a whole. So that could potentially influence especially the dollar yen rate and the yen crosses. All right, so with that, that concludes today's Daily Dose of Market Insights. I'm Kelvin Wong here signing off. So before we go, I need to make an announcement that I'll be away for the next 2 days. So there will be no daily dose on Friday, 25th of April, and as well as next Monday, 28th of April. And daily dose will resume again on next Tuesday at 29th of April. All right, so with that, I wish you all a great day ahead, a restful weekend as well in advance, and we shall speak again on next Tuesday, 29th of April. Thank you.